Welcome to the September 18th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. I'm going to run through a few broad market averages, and then we'll get into open positions in the model portfolio. And finally, we'll cover potential setups during the next few days. Up first is the NASDAQ composite, and we're going to go to a hourly chart of the NASDAQ 100 futures. And we can clearly see a range that has developed on the hourly with the price action stalling twice at the prior swing high. And we have two successful tests now of the prior swing low. And let's focus here on the price action during Thursday's session. There was a strong reversal off the lows with the price stalling at the 20-day EMA, and then a few hours of the price finding support around the 10,950 area with a nice bounce into the close. And since then, the price action's just been in a tight range. We'll have to see if there's some follow through on Friday. And what we're going to be looking for over the next few days is how does the NASDAQ 100 respond to today's gap down? Will it be able to reclaim the 50-day MA and hold? Or will it possibly just fill this gap and then close back below the 50-day MA? But I just want to point out that the NASDAQ is in week 3 of its base. And we could be in chop mode for 3 to 4 more weeks or 3 to 4 more days, depending on when we see a clear buy signal in the NASDAQ composite. Until then, we're going to have to remain patient. On to the S&P 500. I'm not going to spend much time with this index. Pretty much the same idea. 2 weeks worth of stalling at the 3430 level. And looking at the weekly chart here, we could see a push through the 2-week high that stalls next week, and that leads to another reversal back below the 2-week low, maybe to set up a double bottom-ish type action. The point being is that anything can happen while we're in chop mode until there is a clear buy signal with stocks that are at low risk buy points. As for current long positions in the model portfolio, we are still long AEM. Obviously, if a false breakout here with the price action undercutting the low of the breakout day did close back above the 9 EMA. But we're going to be monitoring this position closely, as we believe it will have to hold the 20-day EMA to have some chance of being able to recover here in the short term and pushing higher without having to retest the 50 or 10-week moving average somewhere around 79. And that's it for open positions. We've mostly been in cash the past few weeks with small buys in CRM and FVRR that failed to work out right away, so we exited both positions with small losses. So we're down to AEM, and we'll just have to see how it holds up versus the 9 and 20-day moving averages next week. As for new setups, this is a tough market to go long in, but there are some stocks that are holding up better than others that have shown relative strength, that if we closely monitor these positions, we may be able to locate low-risk buy points. But operating in this type of market is probably best done with a small position size and tight stops. There's no need to step on the gas right now, as conditions are not ideal. So here are a few stocks we are currently looking at. First up, FSLY, which is clearly below its downtrend line and the 50-day MA. But Thursday's reversal is interesting. And we're just monitoring the price action to see if it can reclaim the 50-day MA and hold, which we would view as a bullish sign. Next up is DDOG, which reclaimed the 50 MA this week, but was rejected at the downtrend line. We'll see if it can hold up around the 50 MA here. AVTR, pretty tight range, making higher lows. On a weekly chart here, we have this base forming just above all-time highs. So that's a bullish sign. Note the big pickup in volume over these 2 days, so big accumulation days. So looking at AVTR to potentially hold this 20-day EMA and break out if when market conditions improve. NVTA is a stock that recently broke out, and we're monitoring the chart for a pullback to the 9-day moving average here over the next day or two. PINS has also shown quite a bit of relative strength, still well above the 50-day MA, trying to hold on to the 20. As long as PINS can hold above the 20-day EMA, minus a shakeout bar or two, I think it's still going to be within striking distance of new highs. So it's going to be something we want to keep an eye on. HZNP is another we're monitoring. HZNP is also looking pretty good, finding support off the downtrend line here. Wasn't really a breakout to new highs as it stalled. There was a clear break of resistance around the 76 area, and it looks like Thursday's price action bounced off support. So we'll have to see if the price can chop around for a day or two and potentially look for a low risk entry point off the 9MA. And the last setup of the night is more of something that we're watching, more so than a buy entry, though aggressive traders could potentially enter TDOC based on Thursday's reversal candle and look for a follow through to the upside and a retake of the 50-day MA. We're waiting for the price action to retake the 50 MA before we enter. But we just wanted to show the strong reversal action in TDOC here off the lows on 9.4 and once again on 9.17. So not really an actionable setup, but something to watch based on the recent reversal candle action we're seeing just below the 50-day MA. All right, well, that's a wrap for tonight's video. Based on Thursday's close, we're looking for potential follow through on Friday. Whether or not we get that remains to be seen. We're neither bearish or bullish on the market at this point. We just feel that it's in base mode and that it'll likely fool the bulls and the bears until it's ready to go. Hopefully we get some sort of clear buy signal before that happens. Thank you for joining us and have a great weekend. We'll see you next week.